Today's a big one. Entries. Now, when we talk about entries, sometimes traders think this is such a simple topic. Oh, all I need to do is click buy. All I need to do is click buy and I'm in on the stock. But I will tell you, knowing where to enter a stock is one of the toughest things to do. One of the easiest things to do is to find a top gainer on the day. Finding a top gainer on the day isn't very difficult. We can always find the hottest press releases. We can always find the stocks that are having some of the biggest gap ups. We can always find the stocks that are going to have the most volume. We can always find the stocks that in the morning has the most attention. We can find them over on social media. We can find them, of course, right on our trade idea scanners. We can find them, of course, right in chat. Everyone's going to be talking about them. But to actually be able to nail that perfect entry, to actually be able to nail that perfect area, to be able to get on that play and make money, that's going to be something that takes a lot of skill. Because I can't tell you how many times you can find the number one top gainer of the day and you actually finish in the red. And how do you finish in the red when it's the number one top gainer of the day? Well, because you timed it wrong. You got in on an area that maybe had a little dip and you thought it was dumping, so you got out. Later on, it went on a big time breakout. Then you chased maybe at the top, bought in too late. And then again, the stock then started coming back on down before it had to consolidate and move back up later on. So entries is an extremely valuable, extremely important skill to have in your stock trading. So let's start talking about this a little bit more. So what is an entry? An entry of a stock is going to refer to the price at which an investor buys or sells the security, right? The entry point is usually a component of a predetermined trading strategy for minimizing investment risk and removing the emotion from trading decisions. A good entry is the point which is often the first step into achieving a successful trade. So, from now on, I don't want anyone to ever buy a stock without, of course, finding that great entry point. I don't want anyone buying a stock and just buying a stock just because it's moving on up. I don't want anyone buying a stock just because it's a top gainer. I don't want anyone buying a stock because your uncle told you to, or some random person told you to, or your friend's group chat told you to. That is not why you buy a stock. You buy a stock at the point where you have the most reward and the lowest risk. And that is what a good entry is all about. We find a stock that is hot. We find a top gainer. We find a stock that is moving very well. And we find within that pattern, where do we have high reward and where do we have low risk? Risk and reward is everything. And if you come to the point where you say, I have a better chance of losing than I do winning, obviously it's not worth your entry. If you come to a point where you say, if I buy in on this stock right now, I have a better chance of winning than losing, then it is a good entry. So many people get lost in the fact of seeing other people make money. So many people get lost in their emotions saying, I need to hop in on this. This is a top gainer. I'm buying the stock. I need to. And you're buying it too late. You're buying it at the top. Even if there's, again, a very big spike, you can always get it on a dip buy. You can always get it on its next spike. You don't need to buy into a play because your emotions feel like you're greedy. You need to control those, and that's one of the biggest things. So let's figure out how we can find good risk versus reward. How can I make sure that I'm trading with 70-30, 80-20, 90-10? And what am I referring to there? I'm talking about the percentage of me winning. 70% chance of winning, 30% chance of losing. 80% chance of winning, 20% chance of losing, 90% of chance winning, 10% losing. Right now, in 2021, my win rate has been bumped up to 77%. 77%. That means almost out of 8 out of 10 trades, I win on. Now, of course, as a trader, I'm going to be taking losses. I'm going to take a loss every now and then. But the thing is, I wait for great risk versus reward ratios. I wait until I have, where I sit down and I say, hey, I have a great chance of winning on this trade because I know support is here and the stock has a lot of room to run. So when we look at, of course, our charts, and we've learned about indicators and we learned about support and resistance. Now, of course, we want to use that support and resistance, use those indicators, and learn how to read the level 2, of course, to be able to see these stocks be able to shoot themselves back on up. So where do we want to enter a play? Where do we always have good reward? We're always going to have good reward, of course, at support, and we're going to have good reward at resistance. Now, of course, when we say support, you guys are saying, okay, that makes sense. Maybe, again, a bounce play. But what do we mean by resistance? Why would we want to buy a stock at resistance? Well, this is actually going to be at the break of resistance. These are the two times we always want to be looking for a stock, at support or the break of resistance. Now again, don't get ahead of yourself and be like, okay, very simple, very easy. There's a lot that comes down to it, so let's make sure we check this out and do it the right way. So let's break down support. How do we buy stocks at support? Well, buying at support, we are going to buy at the strongest support line we see after a spike. Remember, team, we learned in our last lesson, we learned about past chart history pattern of support. We learned about natural support. We learned about detail support. Let's take a moment, review what is past chart history. Past chart history was any time in the previous chart, previous days, where the stock was able to bounce off some very strong areas. That could be bouncing off of strong areas, or that could be old highs, which was resistance, which is now support. We have natural support, which is every 25 cents in the market, with the 50 cents and the $1 marks being the strongest. On top of that, we know $1, $10, and $5 are the strongest resistance lines and support lines in penny stocks, and anything above that go with $5 increments as the next strongest support and resistance lines, which would be 15, 20, 25, 30, 35, 40, so on and so forth. Obviously 50 and 100 are very strong as well. So again, we have natural support and we have detailed support, which would be again bouncing off of indicators, bouncing off 52-week lows, bouncing off the open, the previous close, anything along these lines. So we are buying at support because we think this is going to increase reward and decrease our risk. If we see that, again, we have a nice support line, let's say the $5 mark, the stock is falling from $7 down to $6, down to $5.50, we could say, hey, this stock just fell $1.50. We know $5 is a very strong support line. Let's look for a bounce play right here and see the stock move itself back on up. So this is going to be increasing our reward and, of course, decreasing risk. So buying at support will often be a safe and predictable way to profit in the stock market. So how many of you guys right now are trading stocks and you haven't been successful? How many of you find top gainers and you trade them and you end up keep losing? Well, think about right now. Are you buying them at support? Or are you just buying them because, again, you're hoping you get lucky? You're buying them and you're hoping the stock moves in your favor. Are you buying them with a true game plan? Or are you buying them and just saying, okay, hopefully momentum pushes them that way? Have a game plan. And that's what this topic right here is all about. And this is the first step of our game plan, which is what is our entry. So how do we find good risk and good reward? We want to, again, always look for entries that are next to support. So again, when we buy near support, we can see a support is established right here. We have our resistance. Guess what happens when the stock starts falling back on down? Let's say that this is the price of $5. If we see the stock goes from $5, runs up to $6 and gets rejected, what can we do again? We can say, hey, let's look for another entry right at $5. Then again, the stock starts moving its way back on up, runs up to $6. Guess what happens? It starts coming back on down. And as we know, let's make sure we look for an entry right around $5. Now, something I want you guys to understand is the first bounce off of support is always going to be the best bounce off of support. This is what I like to call the basketball effect. So what do we have on the basketball effect here? I'm just going to draw a quick little picture just so you guys can completely understand this. Is we always want to try to learn our first support lines. Our first bounce, our first support right here is always going to be some of our best. We actually talked about this yesterday, but I want to make sure every single trader is fully aware of it. So if we have right here, let's say we have our gym floor, and then of course we have you. You right here is in the gym, you're having a great time, and guess what you do? You pick up a basketball and you just throw it across the gym. What happens when you throw this basketball across the gym? You are going to, of course, launch this ball in the air, and what happens to this ball? This ball is going to fall and hit the floor. Once it hits the floor, it'll bounce on up. And once it comes back down, it's going to hit the floor again and bounce on up. And once it hits the floor again, it'll fall and bounce on up. But what's happening to these bounces? These bounces are getting smaller and smaller. And in stock trading, that means, again, the stock's going to fall on off. If you want to know if a stock is going to have a breakout or a crack, the number one thing you want to be looking for is going to be looking for higher or lower lows. So in this case, what do we have at this moment? Well, if we start at our peak and we have our top area right here, and we have another area right here, and another area right here, and another area right here, let's connect the dots. These dots, as we can obviously see, are leading to a descending triangle pattern, which is going to lead to a drop on off right here. So when we are looking for bounce plays, the number one area that we always want to try to get in on is the first bounce. The first bounce will always be the best. The first bounce will always be the strongest. The first bounce will always lead to the biggest payout. But the first bounce is also harder to know. Why is that? Well, again, let's take a look back at our chart right here. If we take a look back at our chart, now that we see it, it's very simple and easy. But again, sometimes you see $5 as your first support line and you say to yourself, okay, hey, there's $5. But it doesn't really become kind of super clear until the second one, right? If we see that $5 bounced here and $5 bounced here and then again $5 bounced here, it's like, okay, hey, now it is going to hold $5. But the longer we wait for a $5 bounce, most likely the better chance it has of cracking through it. The more you hit of a wall, the better chance you have of breaking that wall. Now that could be support or that could be resistance. So we want to try to nail these support lines as quick as possible because that first bounce play is always going to be the best bounce play. Let's take a look right here. You guys can see how great is this uptrend. This uptrend is looking absolutely amazing. And once we place our uptrend on this play, noticing our support, what can we see right here? We can see how great are these entries. We can see our first entry is going to happen right here. We could look for another entries all around this area. We can see all entries right around this area. And of course, our final entry, which would be right around here. So how do we actually want to play a bounce play? How do we actually want to get in on a dip buying opportunity? Well, the way we actually want to do this right here, team, if you guys do not know, is when we get in on a play and when we get in on a bounce stock, we want to have, let's say it like this. We have our main support. Here's our support line. And actually, let's turn this into blue because that's why I always want to have our support. Let's do it again. We'll do a nice blue support line right here. And what we're really looking for on these bounce plays is the way you want to have your game plan is, let's say the stock spikes on up, little resistance, breaks on through. Now, as the stock starts coming back on down, we know that this old high is going to be resistance, which now that we're above it is going to be holding up as support. So we know, again, the stock got held up at $5, got held up at the $5 mark. Now, as the stock broke through $5, we're expecting when it hits this mark right here, we should see a bounce play and move itself back on up. Great logical thinking. I think that's an awesome game plan. So what I would do if I were you was I would say to myself, you know what? Let's go ahead and let's put a limit order right around this $5 mark. So right at $5, we're going to go ahead and put a limit order on this play. Now, what else are we going to be looking for with this limit order? We are now, since we have this stock all set, we also want to place a stop loss right underneath that limit order. Because again, when we have a stop loss, that's going to limit us from losing whatsoever at all. So this play at this time, you can see it would be coming back on down. It would hit this area, and 8 out of 10, 7 out of 10, 9 out of 10 times, you'd be 100% correct as that stock would bounce back on up. Let's say it's the worst case scenario though. And the worst case scenario that would happen would be that this stock would come crashing on down. This stock would hit, of course, what area? It would just hit this mark right here, and let's say it crashes on down. Well, how much money would you lose? You would lose maybe, $50. And the thing is, that's not going to ruin your account. The issue is we went in on this play at a great predictable area. We got in on this play at a bottom support line, which was absolutely awesome. Now, not every play is going to work out in the stock market as we plan. Sometimes there will be unplanned events where we get a crack or a dump or the stock falls apart. But the thing is, we have great risk versus reward because even if the play doesn't work out in our favor, we have such a tight stop loss that we're going to be losing minuscule. And on our next win, we're going to make that back and more. So every single time right here, you could see perfect little bounce. So if you got in, let's go back to this chart right here. If you got in, let's say right on this trend line, you'd be having a stop loss right here. And again, you can get in on the trend line. And again, you could see we have a little bit of lower shadows. Sometimes that takes people out. So it all depends on you how much of a stop loss you want. But let's say again, you have a stop loss right here, a stop loss right here, a stop loss right here, a stop loss right here. You can make a lot of money. And again, if you put your stop loss right here and stop loss right here, stop loss right here, you're never getting taken out. So your risk and reward is amazing because when you get filled, you have very little to lose. You only have this much to lose. That's your, again, area to possibly lose. And how much do you have to win? Look how much room you have to win. Boom. You have all this to win. So this is why people are successful in the stock market? They look for areas that are high reward and low risk. Where do people end up losing? People end up losing when they buy stocks, let's say, bounces off the trend line and they see the stock go on a very big spike. They see the stock go on a very big spike, so they buy right here. Then what happens? You get this big red candle and they say, oh no, I chased it. It's dumping on me. Let me get out of it. And they sell right here. Then the stock starts moving on up and they say, oh my goodness, it's spiking again. I can't believe I got out of it. I'm going to buy it. I'm buying right here. And then again, what happens? It starts dumping and they sell right here. And they say, why is it every time I buy a stock, I end up losing? And then again, the stock starts spiking its way back on up. They go, oh my goodness, it's happening to me again. Okay, I'm buying this one. I'm buying this one and I'm holding. I lost on the first one and it went on up. I lost on the second one and it went on up. You know what? On this one, I am buying and I am holding on this one. You know what? I got it this time, stock market. And guess what happens? The stock again starts falling, starts falling. They start selling. They just lost their whole entire account. You know why? Because they didn't have a game plan and they ended up buying at the whole entire area. Then they again lose their whole entire account. And guess what happens? Boom, big time stock, right? Big time rip, big time run. And that's where they go, I hate stock trading. This is one big joke. I hate this, right? How many people have ever maybe felt that before? Where you, again, go through it and it's like, okay, I'm buying. Oh my goodness, I just lost. Oh, if I kept holding, I would have won. Okay, let me buy right now. I just lost. Okay, let me buy right now. Okay, let me keep on holding. I'm just going to hold. I'm down thousands of dollars. I got to get out now. And then again, it goes on another big time rip later. That's because look how emotional that was. That was just so emotional by me. You know what's not emotional? Hey guys, here's bottom trend line. Let's look for entries when it comes down to trend line. Put your stop loss right underneath it. Boom, 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 boom. Right? Takes all emotion out of it. There's no emotion when you actually have a plan. There's tons of emotion when you're buying chases at the top, hoping it goes up for more. You're again, heart's beating and you're getting all nervous, just looking to see if this is going to be able to continue to move on up. That's where all the emotion comes from. People say, oh, I'm so scared to buy. I'm so scared to hold. Why are you scared to buy? Well, again, maybe because you don't know the right area to buy. One of the best areas you should be buying every single time right next to that bottom support. And you know what? Put a stop loss right underneath your entry. 10, 15 cents or so. The most you're going to lose on 1,000 shares, $150. You again go ahead and do this and you win. Most you're going to win, or probably around what you're going to win, probably 700 to 1,000. So that means if you lose $150 and you're winning somewhere around $700 to $1,000 every time you do win, you're going to have an amazing risk versus reward ratio. That's basically saying that you have to lose 4 times to really even tie one win. So again, you could lose, and one win, you make everything back and you're back to even. That's how you're successful in the stock market. But what's the problem with most traders? Most traders, again, only take small wins and let big losses happen. How many people can relate to that? Where they say to themselves, oh, I have big losses and small wins. All my losses are $500, but my wins are $80. Oh, my loss here is $428. This win is $100. You have the whole entire thing flipped upside down. That's most likely because you're chasing and you're not buying at lows. It's almost impossible not to, again, have a great risk versus reward ratio when you're buying at support. Because when you're buying at support, as long as you put that, again, bottom your trend line, bottom support line right there, and you put that stop loss, you'll get taken out right away when things aren't working in your favor. And when things are working in your favor, you're going to be able to make a lot of money. So how awesome is that? We're figuring out a way right now that's going to allow us to lose, let's say, 3 times, and all we need is 1 win, and we make all of it back and more. So you guys don't even need to be, let's say, winning 50%. You could technically right now be winning only 25 to 35% of your trades, and you're still a profitable trader. Now imagine when you start getting better and better and better, and you start winning, let's say where I'm at right now, 77% win rate. I have a 77% win rate right here, and on top of that, with my losses again take little dents out. So again, little tiny, not even dents, little nicks, right? Little nicks, because we have stop losses and we follow them. So this is why, again, we're able to have so much success in the stock market. So how amazing is this starting to see that we start developing this plan and we know, okay, now our reward is bigger than our risk. We're not getting emotional. So again, I can think more clearly. And on top of that, I know exactly where to buy. As you guys can see right here, what do we have on this graph? We can see where would all our entries be at. Our entry, we could see again, would it be A? Then of course we have B. And sometimes, again, you need A and B to kind of establish itself to kind of see a true trend line. And then you could look for an entry right here at C and an entry right here at D. And maybe after A and B establish themselves where you can see, okay, here's a clear-cut trend line, again, when it comes down to C, put a stop loss right underneath the trend line. Then again, when it comes down to D, put a stop loss right underneath the trend line. And again, when it comes right here, you can put a stop loss right underneath the trend line. Now, it's almost the same exact thing, guys, when we're looking for the opposite. And that's going to be, again, looking for the break of resistance. What do you think if we had, again, jump a little bit forward right here? What do you think we would be doing at the break of resistance? Instead of having a stop loss right here, we're actually going to be doing the opposite and actually be looking for an entry. Looking for an entry if we can break right here. Looking for an entry if we can break right here. Looking for an entry if we can break right here. Because if we can break resistance, what does that usually lead to? That usually leads to a spike. That usually leads to a run. That usually leads to a rip. That usually leads to a climb. So again, when we break resistance, that's where, again, we want to be looking for entries. So we could say buying at the break of resistance right here. So buying at the break of resistance, if done right, will lead to some of the most profitable returns. The strong move is due to the psychological aspect of breaking a strong barrier, which only brings in more buyers. This is higher risk and higher reward. So you guys could potentially lose more, but you can also, of course, win more. So this comes down to you on what you want to do and how you guys would like to do it. Now, when we take a look over on our chart right here, you guys can see our typical chart where we have support and resistance. Resistance turns into support. And as you guys can see, if we want to draw out our line so far, we would have a game plan of A is established, B is established, C is established right here. And now sometimes we need A to kind of form to go ahead and look for an entry on B. And then, of course, once we have an entry on B, we could also look for an entry on C. We also know at this point we could put stop losses right underneath our entry, and we are, again, going to be having great areas of success. What we already discussed as well is we want to always avoid trying to buy anywhere in here, anywhere in the middle. Anywhere in the middle section is like our no-no area. Because the middle section, what could happen? We could get faked out with a little bit of a drop. We think it's going to go lower. We can, again, the stock, starts spiking on up. We think it's going to go higher, then drops later. Anywhere in the middle section, just a little side note, is the worst area to buy. The areas we are always looking to buy is either at resistance or at support. But all this right here, don't ever buy here, because this is just hoping that the stock is moving in your favor. Where do we always like to buy, team? We either buy at the break of resistance or we buy at support. So we're buying at A, B, or C, or we're buying when, again, resistance is broken. And when resistance is broken, we could see, hey, instead of having a stop loss, we'd have an entry right here. We would have an entry right here. And as you can see, when it breaks, our entry now is right here. So how does this work? When we buy at the break of resistance, we are looking for this wall to break on down. When we buy at the break of resistance, we're looking for that psychological push where traders come up to $4, let's say, can't break $4. They all give up. We come up to $4, we can't break $4. Everyone gives up. We come up to $4, every single person buys in, breaks $4. Everyone goes, whoa, we did it, we did it, we did it. Guess what happens? Stock goes on a very big spike. Stock goes on a very big rip right here. The biggest spikes are going to happen at the break of resistance. And at the break of resistance is where you see what happened. The stock go on that ginormous rip and run, where you see, again, shorts get out. They, again, have to cover their position, and the stock goes up even higher. The best position you could get would be where? Back down here by option C, right? Where you, again, could go next to the letter C right here. You would have the whole entire ride up. Then, again, you break through resistance. Then you get the massive spike, the massive run. So when we are looking for entries, we are, again, looking at the bottom or we're looking at the top. But we're never looking in the middle, because the middle is just where, again, it's a whole bunch of randomness where we really don't know what's going to be happening. So when we take a look at this play, what could we have on this stock right here, team? Well, we can see every single time we break through resistance, we get a very big spike. So we could have an entry right here. We don't break it. We can have an entry right here. We don't break it. Here's our entry right here. Guess what happens? We break it. We get a very nice spike all the way on up. Now, of course, what happens? We establish our resistance line. Now, our resistance line is established. Guess what? We have our support lines. Here's our A. Here's our B. Here's our C. Now, I can see that this one is definitely a lot more choppy, right? We definitely have a lot of lower shadows and upper shadows. But what I want you guys to really get the sense of right here is when we break through these main resistance lines, guess what happens? Very big spike, very big move. When we break through this resistance line, guess what happens? Very big spike, very big move. You break through this resistance line, very big spike, very big move. So as we can tell just by looking at this, I know this one's a little bit more choppy, where would be the best areas to buy and the best areas to sell? And just take a look, let's say right in this middle chart right here. Let's again take a look right in this middle chart. And we take a look right at this middle chart area. We know the best areas to get in on this play are going to be right along the bottom, right? We know if we really want to have the best chance of success, we want to buy in right next to the support line, because every time it comes to the support line, it usually bounces back on up. Every time it comes to the support line, it usually bounces its way back on up here. So we always want to be looking for, again, those bottom areas. Where do we want to avoid, right? Where do we want to avoid? We want to avoid anything in here, right? Buying in here, we have no idea what's going to happen. This is just absolute gambling chaos. We do not know. Where else do we want to look to enter? We also want to look to enter right at the break of this resistance line, because that's where you can see the next leg on up. Now, something that you guys may be noticing, which is very true as well, is when a stock comes up to resistance, it usually needs to touch resistance at least once to twice before you get a breakout. And if you guys have a breakout, and if you guys haven't noticed, just take a look at this chart right here. And let's go over towards this one. What are we starting to see? We see the stock hit resistance. Now, again, what we usually have is a stock hits resistance once, that establishes resistance. So the first touch of resistance lets us know where resistance is at. The second touch of resistance usually enforces that resistance line. So the second touch of resistance enforces the resistance line, and this is going to be telling us, wow, this is resistance. This is where we need to break through. And the third touch of resistance is where traders always try to break that resistance line to get the spike, to get the move, to get the rip, and to get the climb. So that's something that we always want to be looking at every single time, of course, when we're getting in on these plays. All right? Very, very important. Now, when we take a look over on, again, VRNG, what else can we notice about this play? As you guys talked about before with the basketball effect, I also want you guys to realize that this play right here is building a higher low. I talked about with the basketball effect, one of the worst things to look for is a lower low, because that's going to lead towards a very big drop. We can see again when we have higher lows, we get very big spikes, very big moves, and very big runs. So higher lows right here, look what happens there. The stock gets an excellent squeeze pattern. And when this is building higher lows, this is leading towards, again, more spikes, more rips, and more runs. If you guys see a stock building higher lows, it's one of the best ways to know that a breakout's going to be coming on up. It's going to be one of the best ways to know that a stock is going to be able to get this movement on up. So as we can see right here, we have our first. Again, what does the first one represent? It establishes resistance. It tells us where resistance is at. We have our second touch, which is going to enforce resistance. This is again showing us, okay, wow, this is a strong resistance line. And the third touch is going to be the break of resistance. So it's usually going to be the third or fourth touch, which usually breaks resistance. Let's just go back to our last chart. What can you guys see here? 1, 2, little fake out, 3. Even right here, 1, 2, 3. Right, even right here. When we take 1, 2, and then big drop, 3. Right, we could take a look right here, and even these textbook examples. 1, 2, 3. This is what we usually see in a lot of our plays, guys, before they start breaking their main resistance line. Here's another chart as we're moving on up right here. We can see this one has a little bit more towards it, but we can see that this play, of course, has its resistance, and has its resistance. Notice that this play does not have any sort of higher lows. That's why this one is not having kind of like this 1, 2, 3 breakout. This one is more, again, just kind of establishing resistance. We can clearly see across the whole entire board right here that what happens when Tesla comes to the price around 360 right here. What do we see on this play? We get to around 360, we have a lot of resistance. 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 So what happens when we break 360? We have a massive amount of buying. So where do we want to hop in on this play? When the stock breaks 360. If I said, hey, we have not broke through 360 the last 5 times we tried it, well, guess what? When you break through 360, it's going to bring in a lot of hype. It's going to bring in a lot of momentum. It brings in a lot of attention. Breaking through resistance is breaking through a barrier. And it's a very strong psychological move. When you do something that hasn't been done before, it brings in all the excitement in the world, right? I always think about it in like an Olympic way or like an action sports way. Like let's just think about gymnastics. And let's say no one has ever done a quadruple backflip, in gymnastics before, right? And again, I'm just using this as an analogy. And let's say again, in 2000, right? In 2008, let's just say 2008 right here, someone tried a quadruple backflip and you know what? They didn't get it. They fell short. And then again, in 2012, someone tried a quadruple backflip and it didn't work. The crowd stood on their feet and they all went, ugh. And again, the girl got zeros or the guy got zeros. Then someone tried it again, 2016. Everyone's getting fired up and saying, oh my God, I can't wait until someone tries a triple backflip or quadruple backflip. And it didn't work. And in 2020, it didn't work. And you know what happens? Maybe all of a sudden in 2024, right? 2024, someone comes on up and they land a quadruple backflip. What happens? The judges go crazy. The whole entire stadium absolutely erupts. Everyone's on their feet. It's on ESPN, #1, top 10. Everyone's going absolutely crazy. She landed a quadruple backflip that's never been done ever, right? So again, it's just like absolutely crazy. And that's kind of the same exact wall. It's a very strong barrier. So once we break a barrier, once we break kind of a wall that no one has ever done before, it opens up a lot of kind of new opportunities. It opens up a very big amount of hype. It opens up a ton of excitement, a ton of momentum where everyone comes flying on in. But the issue with new traders is they do what? The issue with new traders is they don't realize that this is going to happen right here. Right? No one wants to buy in at 360. You know why no one wants to buy in at 360? Because they get scared. They don't even notice that resistance is there. So what do, again, so many traders realize, so many traders are relying on? They're focusing and relying too much on their eyes, their visual. So many people say what to themselves? And again, when we explain it, it doesn't make too much sense, does it? Where we as traders, we see a ginormous breakout. How many of us see a ginormous breakout and we go, wow, guys, that is one big breakout. I can't wait to buy in. Dek, I'm buying in on this play. And again, you buy in right here. You buy in right there. And I think, why'd you just buy in on that play at $900? Well, Dek, it's a breakout. The stock's going up. Look how big the stock has gone up right here. So many people have been buying the stock. I want to buy the stock and make money, right? Everyone's buying the stock. I want to buy it to make money. But so let me ask you, so why did you buy that stock? And you say, I bought that stock because it went from 400 to 900. I want to make money on this play. But it doesn't make sense, does it? So you bought a stock that went from 400 to already has gone up to 900. And you don't think people are going to start taking money? You don't think it's going to have a pullback? No, the stock's going to go up forever. This stock's going to go up to 20,000. The stock went from 360 to $960. We haven't had one red day yet. And you think, again, this stock's just going to keep going up forever? Do you know how it got up to $900? From people buying the stock. What if you were in at 400? What if you were in at 500, 600, 700, 800? Don't you think, again, the moment you start seeing a little bit of red, you're going to get scared and start taking your profit? We rely too much on what? Our visual, right? We always wait for visual confirmation. We always say to ourselves, hey, there's a huge breakout. Let me buy it. When really that makes no sense. The breakout has already happened. We're buying a stock at the absolute top. If I was a financial analyst, or let's say your broker, your family broker, right? And I came to your house and I sat you down and I said, hey, here's the stock. It's moved again, let's say 500%. This stock moved 500%. And you go, ooh, I'm interested. And I go, yeah, it moved 500%, completely overbought. Any day now, it's going to crash. Everyone's going to get absolutely wrecked. You want to buy in on it? Right? That's basically, again, what you guys are doing sometimes when you guys are chasing these plays. Look at the RSI. We talked about this. Look at the RSI all the way up near a 90. Near a 90 on the RSI after a huge breakout. What do you think is going to happen? The stock's going to be dumping down here. We had talked about before that in stock trading, a lot of new traders fail because they rely too much on, of course, waiting for a breakout to feel confident a breakout's happening. We wait for a breakout to be confident that says, okay, the stock's breaking out. Now I can buy it. Oh, why do I lose every time I buy? Because you're buying in way too late. You need to be, of course, where at? In this area right here. If you are not in this area, you are going to be in that huge percent of traders that constantly end up losing, right? Which is all these guys up here. All these guys, These guys are all the losers because these guys are waiting way too long to get into a play, and that's the big issue. People wait for, again, the visual confirmation, but once you have the visual confirmation, the stock is then overbought, where, again, everyone keeps on losing. So we need to, of course, do the studying and realize where we need to get into, which is actually the break of resistance here. So market conditions are everything. Check pre-market top gainers. If the number one top gainer is below 50%, do not look for breakouts on that day. This is very, very important, guys. Market conditions are everything. So again, what we're saying on point one right here, if we wake up in the morning and we have stocks that are up 100%, 150%, 200%, stock has gone so far from $5 to $15, people are going crazy. You can look for massive breakouts. If we wake up in the morning and we see penny stocks and people are saying, hey, is anything going on today? Does anyone see any sort of big breakout? I think that stock over there has news. You don't want to be looking for breakouts. Market conditions are going to change from day to day. I say market conditions are just like the weather. Some days it's super hot. Go outside, have a good time, swim around, wear shorts and a t-shirt. Sometimes it's going to be a blizzard out. And you know what? You stay indoors. You stay warm. You stay bundled up. When it is, again, super hot, look for big-time breakouts. When it's a blizzard outside, stay indoors. Look for support bounces only. Because, again, it's very easy for a stock to bounce off support. It's very easy for a stock to fade off and get a little tiny bounce. It's not easy for a stock to break very hard resistance because you need hundreds of thousands of buyers in on that play to break that wall. And if you don't have very hot market conditions, you're just going to keep hitting that wall over and over again. If we see multiple top gainers, 100% or higher, look for a breakout. Penny stocks trend run pack in packs. So breakouts on Monday lead to more breakouts on Tuesday. A dead Monday will lead to a dead Tuesday. So again, we tend to run in packs right here, guys, where what we are going to see is if we have a supernova, we usually have multiple supernovas. So at this time, as you guys know, we could take a perfect example and take a look right over on what? GME. What happened when GME last month went on this ginormous spike? GME went from $18 all the way up to $485. Just watch this chart right here. The next day, KOSS went crazy. The next day, AMC went crazy. The next day, EXPR went crazy. The next day, SAVA went crazy. The next day, AUVI went crazy. The next day, OCGN went crazy. The next day, AACG went crazy. The next day, AAME went crazy. The next day, so on and so forth, CLPS went crazy. The next day, GTEC went crazy. The next day, it just keeps on going. So again, when we get these super hot markets, things tend to get super, super hot. Because every single day, people are waking up expecting to see a breakout. Every single day, traders are waking up expecting to see that big time hype. We remember, what did I tell you guys before? Stock trading is all based on psychology. It's all based on psychology. That's one of the most important things about it, guys. It's all based on psychology. And if we wake up in the morning and we see that GME runs $500, if we make money, we say, oh my goodness, I just made a killing. I can't wait until tomorrow. We're already eager to buy. If you guys didn't make money, you guys say, oh my goodness, I can't believe I missed out on it. Tomorrow, I'm buying the big time breakout. Now you're eager to buy. Then the next day, we get a very big spike because we have so many people eager to buy. And it's the same thing that happens over and over and over and over again. So when we get ginormous breakouts, usually the next day will be ginormous breakouts. But every now and then, we'll get to a little bit of a slower day, and that leads to a couple slower days. So don't, again, do the same strategy every day. One of the biggest problems I have in stock trading, and it's not me anymore, but I get a lot of emails about this, is going to be people do the same strategy every single day. People do the same strategy every day. I can't tell you how many emails that I've gotten in my life that says, Dek, last month, I had the biggest month I ever had. First month I ever started trading, right? I went from $2,000 all the way to $10,000. I was having a ball. It was so much fun. Then all of a sudden, I lost all my money. And they say, I've been doing the same exact thing. I haven't changed anything. I don't get why I'm losing. And that's the issue right there. The issue is, if you don't change anything, guess what? You guys are not adapting to market conditions. Imagine in the middle of August, you guys wear a t-shirt and you guys wear shorts. And the next day in August, you wear a t-shirt and you wear shorts. And the next day, even as you get to September, you wear a t-shirt and shorts. And that's fine. And that works awesome. But what happens as you move to November? What happens in December? What happens in January? In January, you wear a t-shirt and shorts, you're shivering. You're saying, Dek, I don't know what's going on. I was so warm a little bit ago, right? And it's like, what do you mean? It's January. Just like in stock trading, there's going to be super hot times and there's super slow times, and you need to adjust to what's going on in the market. Understand timing. Do not look to buy a breakout over lunch. We've also talked about this before. You want to make sure you guys are buying in the hottest times. And I always want to draw this out just to make this as clear as possible. Right now, it's 11:02. So 11:02 Eastern time. Now, make sure that you guys are, of course, adjusting this to wherever you guys currently are living. So what we have, if you guys do not know, is, let me just draw this out a little bit. All right, nice. So we're just going to draw a nice little XY graph right here. Or this axis. And right here we are going to have time at the bottom. And we are going to have volume on the side. And what do we know? Volume is always going to equal more breakouts, more spikes, more profits. More people buying a stock means, again, better chance we have seeing a breakouts. More people selling stocks, better chance we have cracks. Whenever we see a stock dumping very hard, we can short it. Whenever a stock is spiking very hard, we can make a lot of money. But where can't we make money? We can't make money when a stock has no volume. When a stock has no volume, we can't make any sort of cash. So what can we see right here? Let's put on the bottom right here. Let's say, again, 8 in the morning. Let's go 9 in the morning. Let's go 10, 11, 12, 1, 2, 3, and 4. So this is Eastern time, right? I live New York time, Eastern time. That's what you're going to hear most of the time in the stock market. So if you guys are on the West Coast or, again, in a different country, definitely adjust to where we're at here. Now, 8 in the morning's pre-market. As pre-market comes, we usually see, of course, a lot of traders start waking on up. And you'll see a very hard, rapid increase in volume as, of course, traders are waking up, traders are waking up, traders are waking up. So a lot of people are coming into the market at around 7, at around 8 o'clock. Now, as you get towards around 9 o'clock, 9:30, you're going to have the highest you're going to have at the start of the day. At 9:30, we have peak volume. And why do we have peak volume? Well, again, the market's now open. Everyone's eager to trade. Everyone's eager to get back in the market, ready to make money, trade these brand new hot press releases, do what they want to do. At 9:30, you're going to have the peak, most volume, the best chance to be able to make money. And this peak's going to hold pretty well till around 10 o'clock. But after you start getting towards around 10:30 or so, you start seeing a very strong drop as you move closer to lunch hours. What time do you guys usually eat lunch? Usually around 12 to 2 o'clock. Now in stock trading, usually from around the areas of 12 to 2 o'clock is going to be the slowest time of the day. So from 12 to around 2, we have a very strong, dramatic decrease in volume. But right around 2 o'clock, we start seeing traders start coming back on up. As we get closer to 3 o'clock, now this is the last hour of the day. And then, of course, as we're at 4 o'clock, this is where we usually finish off with not the highest, not as where we were at 9:30, but definitely very high as well. So as you guys can see, where are the best times to trade? The best times to trade are in pre-market and the first 2 hours of the day. The best times to trade is really from 9 o'clock in the morning till about, 11 o'clock. 9 o'clock to even like 10:45. That hour 45, this is going to be the time that you guys want to be trading. This is going to be your happy time where you guys can make a whole lot of money. After that, your second best time is going to be between 2:30 and 4 o'clock. This is the last hour of the day. And this is where a lot of traders are going to be looking to get out of their position, get into a swing trade. Again, maybe push up a high of the day, top gainer at the very end of the day right here. So again, in the morning, we have a lot of eagerness. We have a lot of hype. We have a lot of traders, again, playing in pre-market. We have brand new hot press releases. We have a lot going on at the start of the day. We have overnight news, the current economy, anything that's happened in the past 12 hours. People are, again, excited to trade, right? Just like I always think about it like this. Imagine if it's a basketball game, right? Imagine you go to a basketball game or even a football game. What happens when you go to the first quarter of, let's say, a football game? I'll do football because probably a lot of people enjoy and watch football. If you go to a football game, and let's even say like a college football game, what happens in the first, let's say, right at kickoff? At kickoff, you might be jumping around going crazy, right? You're with your friends, you're having a good time, you're with your family, you're jumping around going crazy, rooting for your team, having a great time. This is the first quarter right at kickoff. What happens as, again, now you're in the first quarter, now starting to move over to lunch, it's starting to move over to halftime. As you get to halftime, you're kind of sitting down, kind of like, whoo, good game, but I'm a little tired, right? It's not like, again, you want to be standing the whole entire time, doing what you were doing at the very beginning, right? You go crazy in the beginning because you're excited to be there. But as it moves over to like the second quarter, you take a little bit of a breather. You sit down a little bit. You're like, all right, I'll stand back up, in a little bit from now. Then what happens at halftime? At halftime, go get some popcorn, go get a hot dog, go to the bathroom. You're not even looking at the game anymore. Then what happens in the third quarter? You start getting a little bit more excited. And in the fourth quarter, you're again jumping around again, maybe even more crazy or just as crazy as when you first got there because it's the end of the game. Same exact thing if you ever went to a concert. You're so excited to see the person that you like so much. Again, they start playing a song. You're absolutely loving it. Then what happens maybe after like 5 songs in? You're like, oh yeah, I love this song as well. I like the song, but I'm not going as crazy as I once was. And then maybe again, what happens? He finishes up his set or she finishes up her set and they go, all right, guys, we'll do one more song. And that last song could be like one of your favorites and you're just having the time of your life again. It's almost like that in stock trading where again, we get so excited as stock traders, everyone's buying at the first, hour and a half right here. And then guess what happens? After this first hour and a half, people kind of calm on down. Then in the last hour and a half, people really go crazy. So you do not want to buy between these times right here. You really want to stay away from these times. And I see so many traders lose between 12 to 2 because they're eager to trade. And I love, again, you guys being so passionate and eager to trade. But the thing is, with you guys, again, trading in the worst times, you're not going to be successful, right? Imagine if you're trading during the time where, again, the majority of stocks are going to fall. The majority of, again, plays that you get into are going to fade off. Every single time you want to see a big time breakout, it doesn't happen, right? That's, again, what you're trading into. You guys work so hard for your money. You guys don't want to be trading in the worst times. But I understand. It's like, oh, I didn't trade in the morning. I want to trade now. Wait until the afternoon. Or, again, better yet, just know that the stock market's not going anywhere. You guys can trade every single day, and you guys are going to be able to come out with money. Don't worry. Again, you guys can trade every single day. The stock market's not going anywhere. It's going to be open again, tomorrow. It's going to be open the next day. So make sure you guys just understand that. So let's keep on going right here. Understanding timing, right? Do not look to buy a break over lunch. So let's start again. Keep on going right here. So when do I buy at the break of resistance? Because we know, again, times right now and, again, certain areas where we don't want to buy at resistance. So when do I buy at the break of resistance? We buy on very hot days where we see, again, large gap up percentage. We buy with weeks with multiple spikes. We buy break of resistance that have big news, that have big volume, that have big activity. We buy when there's extreme confidence in buyers, and we do not force trades, of course. So, of course, hot days, this kind of all goes into one. We talk about stocks with big news. Let's say it comes out with positive phase 3 trials. We're going to see big volume come in. And if the stock has a massive spike, we're going to see extreme confidence in buyers as people say, I'm making so much money, I can't wait to buy more. That's, again, taking all the hype from other plays and bringing it over to this play. So the more excitement we have in the market, that's when you want to buy breakouts. And it's only going to take you probably like a week or two, especially if you guys are in chat, tradecaster.com. You guys are, of course, going to realize everyone will be like, hey, is anything hot right now? That's kind of when you know right away it's not a very hot day. When you see everyone saying, oh my, we are seeing a 300% breakout. Are you guys watching stock XYZ right now? This is huge. Then we know right away there's a big difference, of course, from the slow one to the hot one. We always want to be waiting for those big hot days. That's going to be 10 times better to buy. So when do I buy and support? I can buy at support for any top gainer during a hot day, but I also can do slow days as well. Support bounces, guys, are going to be the best on top gaining stocks, though. So the stocks with the most volume, the stocks that are breaking resistance, will be the best dip buyers. You can't expect a stock to go on a huge dip buy that doesn't have any sort of volume behind it. So let's just look at, again, today's top gainers, right? If we look at today's top gainers, what can we really be looking at? Let's just look at, let's see here. Let's go over to GME, right? GME went from 116, spiked up to 134, fell back down to 122, bounced all the way up towards 143, right? That was absolutely awesome, right? You can see LIXT. This was the number one stock in pre-market. It did give a lot back, as you guys can see, but this was the number one stock in pre-market. LIXT went from $5 all the way up to $7.70 and had a great bounce play from $6.65 all the way back up to $8. So again, if you want to see a multi, $1, $2, $3 bounce play, you have to play the most active plays. It's not like you guys can just pick right now, okay, I'm going to go play, I just want to find like some dead one right here, ZSL. And ZSL, even though it's a slower play, you can still see how the VWAP held as a great bounce play. You can still see ZSL went from 590 to 620, went on about a 30-cent move, went from 620 back down towards $6, and right now it's gone from $6 to $6.15. It's moved about 15 cents off its bounce play. But again, the bigger and the more volume you have, the bigger the bounce play is going to be. So the bigger the bounce play, or the bigger the stock, as in the bigger the movement, the bigger the percentage move, the bigger the top gainer, the bigger the bounce play you'll see. So if you're looking for bounce plays off these type of plays that are only up 0.4%, you're never really going to be able to make any money. You want to stick with the most hot and the most active top gainers. Those are the ones that are going to make you the most money. Tesla, obviously very hot, very nice bounce play. Now, I understand Tesla's not a penny stock. Right now on this Friday, we're not having many hot top gainers. So again, LIXT is the number one play with a 39% gain. But what did I tell you before? If we see, again, the majority of penny stocks underneath 50%, we know right away it's not a hot day. So what does a cold day look like? Because right now in the stock market, it is a cold day for penny stocks. And what did we see? LIXT, underneath 39%. All it's done was fade throughout this whole entire day. JE, currently up 34%. Nice little climb so far, but again, only a 34% move. AFI, number 3 top gainer, currently only up 23%. Now again, only getting little fades back on down after pops. It's not a very hot day that's getting a lot of people excited. When was, some very hot days? When, of course, we were seeing KOSS, right? When KOSS was going crazy and going on these massive rips and runs, going from $4 all the way up to $133, right? OCGN going from $3 all the way up to $19. Seeing AUVI go from, again, $5 all the way up to $36. These are the crazy hot days that obviously we're always searching for. So let's keep it moving right here, guys. I know, again, this is a longer boot camp lesson, but I absolutely love it, and this information is just so important. I want to make sure that you guys are all good here. So what I want to talk about right now, team, is I want to actually break down and do something that I talk about called learning the alphabet. So I want to teach you guys the alphabet right here. And I know you guys may be saying, Dek, I'm 20 years old, I'm 30, I'm 40, I'm 50. I know the alphabet. Well, you don't know the alphabet like I know the alphabet. And how is that, guys? We are going to be learning, depending on either a U shape or a triangle, where we are going to be buying these stocks. So this is going to be extremely important to know where we are going to be buying these plays. So coming on up in our next lesson, we are going to be talking about different patterns. We are going to be talking about how the majority of breakout patterns are going to be U-shapes, and the majority of breakout patterns are going to be triangles. And that's what they come to at the majority of the time. So I do want to break down where you guys should be buying these plays on U-shapes and triangles so everyone has a clear-cut understanding of this. So we're going to draw this out, and we're going to kind of go through the alphabet on the U-shapes and triangles. So a lot of breakouts you guys are going to see. First thing we're going to go with is going to be U-shapes. Now, for a U-shape just looks like this, right? That's what a U-shape looks like. Now, a U-shape is going to be one of our go-to breakouts, a U-shape breakout pattern. And again, most of the time, it's going to look more like something like this, where a stock spikes on up, U-shapes on down, comes back up to resistance, and breaks on out. So let's start it kind of looking a little bit more like a normal pattern here, where we have a stock maybe spiking on up, hits our top resistance, starts falling slightly, finds some sort of support, and U-shapes its way back on up. This would be what we call a U-shaped breakout pattern. We have a very nice hot top gaining play, which has clearly established resistance, and resistance, of course, goes forever, so we can go across the whole entire board here, and we could see right now, where would we want to buy this stock? So when you guys see a U-shape pattern, what we want to talk about at this point is, where do we want to buy our U-shape? Because we already talked about when we want to buy our resistance, or let's say buy for a breakout, we discussed that we want to buy at the break of resistance. And again, this is a great option, but we're kind of getting a little bit more into detail right here. So what do we have on this play? We are going to break this down into the alphabet. And what we have right here is we are going to have, out of the U-shape, different walls. This wall is going to be wall A, where again, simply enough, is going to be the wall where it's basically dropping right here. We are going to have our wall B, where wall B right here will basically be the time that it's consolidating. We will have our wall C, where wall C shows that the stock is moving on up. And then on top of that, we'll also be having our point D, and D was kind of the breakout area that I was teaching you guys before, where the stock, gets a very big breakout. So where do we want to go ahead and look to enter the stock? Well, obviously we know point D or letter D is going to be an area what we always want to be, of course, looking for. But let's break down these U shapes a little bit more. Could we ever, let's say if we see the stock, moving itself on up, could we ever go ahead, and let me erase this part right here. Let's go ahead and look at this stock hit, letter A hit its resistance line. So as it hits its letter A resistance line and starts coming back on down, do we ever want to buy right now? Do we ever want to buy that chart setup? No. You know why? Because this stock could possibly just keep falling. How many times have we seen this happen, right? Just take AUVI, for instance. AUVI, this play just did what? Spiked on up, came right back down. So again, we never want to buy at point A or letter A. That is never a time we want to get involved in. We can also, again, take a look and say to ourselves, okay, would we ever want to get in B? And again, this would be if the stock started falling, maybe started consolidating a little bit, and we're saying, okay, I could start seeing that U-shaped pattern starting to form a little bit. And then what happens? Maybe, again, the stock starts falling on down from here. And again, that's not where we want. So again, letter A we don't need. Letter B we don't need. But letter A and B are important because it shows us, one, the stock is having a pullback, and then B, the stock is trying to consolidate. And you can kind of see, we draw this out right here, you kind of see, doesn't that look like A and B? Stock had a nice spike. We hit our top resistance right at what area? $11. Hit our top resistance right at $11. Stock started falling on A, try to consolidate, and then kind of fell apart. So we don't ever want to buy on A or B. Now again, possibly if you're a little bit more experienced, you might get some entries in B. But where would be the only time you start getting entries in B? Is if you start seeing the stock start building some higher lows. Because higher lows, as we talked about, is going to start showing us that the stock has potential to start moving its way back up. So if you start seeing higher lows, that's where, yes, you can definitely look for a possible entry. So as the stock starts, again, moving itself on up, we start clearly seeing these higher lows. Now, when we get to this point, we can kind of predict the end of the movie. Right? You ever watch a movie before and you kind of know what's going to happen at the end, even when you haven't saw it? You kind of say to yourself, oh, I bet you, this guy's the killer, right? Oh, I bet you they fall in love, right? Any like rom-com movie, like a romantic comedy, it's kind of like, what happens? These two people like each other. Then again, they kind of start flirting. They go on a date. Then again, something happens where it's, I don't know, like something happens that really didn't mean to happen. Then there's like a 20-minute sad scene. And then at the end, there's like a big makeout scene at the end, and then they're happy, right? It's like, boom, I spoiled every single romantic comedy for you forever. So what we have right here is when we get to this point, we kind of can predict what's going to be happening, can't we? We can predict that this stock is going to be coming up to D. Now, we can't predict if this stock is going to break D 100%, but we can predict that most likely at this point, we're coming up to D. So why wait? We can 100% look for entries at C. We can go ahead and look for entries at C. And looking for entries at C is what I like to do most of the time, because looking at entries at C gives us a little bit of wiggle room. Let's say the stock runs up to D and we can't break that resistance line. Well, worst case scenario, the stock starts falling. And if the stock starts falling, we could get out right here. And you know what? That is still above where we got into it. So guess what? If that's our price where we got out, we're still making money. We may not make as much as we want, but we're still making money even if the stock doesn't break out. And let's say worst case scenario, it comes all the way back down to our entry like really quickly. Okay, we break out even. So how great is this that we can start developing a strategy that the worst case scenario is we break even, right? The worst case scenario, we break even on these plays. We can't lose any money, right? Or again, we shouldn't. All we have to do is click sell when we come down to our entry area. And again, we're going to be breaking even. Now, let's say most of the time, what happens? We're playing a number one top gainer. The stock is, again, getting a lot of hype. The stock's getting a lot of momentum. And what do we see the stock do then? Come up to the resistance line, and then boom. And now we have the best entry possible, nice and low, after higher lows. Stock got a breakout, and now it's moving its way on up. So that is absolutely great to see from this play alone. Now, again, if you're not comfortable buying C, obviously, as we talked about, you could always look for the break of resistance, which is going to be D. So we have our walls here, A, B, C, and D. We're always looking to enter on C, or we're looking to enter on D. That's where we're going to be able to have some of the best breakout potential to be able to make the most money. Very great, very awesome to see. Don't buy an A, don't buy an B. C indicates higher lows, D indicates the breakout. Now, we also, again, talked about we want to learn the alphabet now over on triangles. So again, learning over on triangles, what do we have at this moment? Well, again, when we think of a triangle, we think of this, right? Now, let's just kind of flip this a little bit. Let's flip it to like a right-hand triangle where we have our triangle that looks more like this, right? So what would this look more like in a stock, right? Let's kind of compare this into a stock. When we have a stock, we would see it's something that we call a bull flag pattern or maybe ascending triangle pattern where a stock has a very big spike and then all of a sudden it starts doing this. Has a pullback, has a nice spike back on up, has a pullback, nice spike back on up, has a pullback, nice spike back on up, and then of course gets this big time breakout. So where we actually have our triangle is we have our little bit of maybe a little down of resistance right here. And then of course we actually have our bottom support right here. So here's our triangle. And if you kind of connected the dots, there's our triangle right there. So you can see these triangles are going to represent our squeezing. U-shapes represent breakouts, break of resistance. Triangles are going to represent squeezing super tight. Because what's inside this triangle right now? What's inside this triangle is simply enough tons of volume. Millions of shares of volume getting tighter and tighter and tighter and tighter until boom. Right? I always think about it. Imagine if there's a huge lake. There's a huge lake out here. And you know what happens? At a big lake, it's nice and calm. You can just chill, relax. But what if somewhere down the road, the lake gets very tight and all this water pressure gets poured into this one narrow little mark? What happens to this one narrow little mark? This waterfalls, there's whitewater rapids. People are going down here with kayaks, going crazy. When you, again, get these very tight areas of pressure, right? You get, again, a lot more force. Has anyone ever, on a windy day, let's say, opened up a window and then again just like cracked open your door, or all of a sudden your door just like slams shut really hard out of nowhere? It's because, again, when you crack over your window, all that wind is getting sucked right into that little spot. So when you stand in front of it, you're kind of getting like a nonstop breeze because all the wind is getting sucked into that little area. It's kind of like this as well, where we're seeing all the volume in this tight little area until it breaks out, until it gets this very nice pop. So triangles are amazing to look at. And as I said, in our next lesson, we'll be going over breakout patterns, showing you guys more about triangles. So where is our alphabet right here? What's going on here? Well, of course, we are going to be having different areas where we have our A. Here's A. We are going to be having our B. We are going to be having, we still have our resistance up here where I like C, and we're going to be having our D. So this is where it's like, what does A do? A, just like before in our U-shape, what did our U-shape do on A, guys? A up here, established resistance, right? A is going to show us where resistance is. It's going to show us the top, and it's going to show us, again, the drop. Do we ever want to buy on A? Never buy on A. Do we want to buy on B? Well, again, B, just like before, right, up here, this is where the stock was supposed to consolidate. It's supposed to show us where support's at. And again, we got a little bounce off B. So again, if we don't know, of course, where support's at, we just have to wait for B to happen. Now the stock runs back up towards resistance. Now, again, we know that's still resistance. That's not a letter. And we can come back down towards C. And as we know, we like to buy on C because C is going to show us that the stock is building higher lows and start moving itself on up. So C is, again, now our entry because we already know B is established. And as we know, the stock gets tighter. And then D is where we get our breakout. So again, we don't ever buy on A. That's going to show us where resistance is at. We don't buy on B. That shows us where support's at. Then, of course, once that resistance line hits, comes back down, the most important thing about C right here is to show us higher lows. Just like in the U-shaped pattern, the most important thing was to show us higher lows. And once that higher low is established, we know right away we could be seeing a very nice breakout coming on up. And that's where, again, the stock gets tighter and tighter and tighter. And if you're not comfortable buying on C, you can always just wait for the break of A resistance. Just like over here, guys, on our U-shape, we can always wait for the break of A resistance for the breakout where we can buy, of course, right over on D, boom, for that nice breakout. So we have A, B, C, and D. Just like over here, of course, we have our A, B, C, and D. where we, of course, look for our alphabet right there. So again, we always go for C. We always look for D. So going through this, we've learned a lot in this lesson. We learned that we want to buy at support with stop losses underneath. We look for buying at resistance and the break of resistance. We also learned that, again, resistance with higher lows usually hits about 3 times, and on the 3rd time is the breakout. We learned, again, about triangles and U-shapes, and we also learned about the alphabet on, again, where we should be buying on these plays. So another awesome lesson. Next lesson we are going to be doing is going to be going over our breakout patterns so that we're all set, ready to go. Awesome job. Awesome work, and I cannot wait for our next lesson, going over the actual breakout patterns, learning how these U-shapes and triangles are found in the market. As always, if you have any questions, please let me know, but other than that, amazing job.